Today, we're going to be breaking down one of the most practical concepts from ICT, projected range objectives.
All right, welcome to AI Explains ICT. In this video, we are diving deep into ICT's core content, specifically Month 10, Episode 13. This is all about anticipating the day's price action, figuring out where it's likely to go. This is a really foundational lesson for understanding how price moves intraday, so you're going to want to grab something to take notes with. Okay, let's get into it.
Okay, so here's how we're going to tackle this. We'll start with a basic framework for any trading day. Then we'll get into the meat of it, the three main daily profiles. That's trending, reversal, and consolidation days. And we'll wrap it all up by looking at the one thing that really drives all of this, and that's liquidity.
All right, first things first. To make sense of any trading day, you need a structure, right? And ICT gives us a really clear way to classify how the daily range is probably going to play out. This isn't just guesswork, it's a logical framework. And it all begins with understanding the bigger picture, the higher time frame bias. And that big picture bias, we call it institutional order flow. Just think of it as the underlying current, the direction the big money is trying to push the market. You're looking at your daily and 4-hour charts and asking one simple question: are the big institutions buying or are they selling? Answering that one question is absolutely the first step to figuring out what the day might look like. Now, the trading day itself has this really predictable rhythm. You can almost think of it like a 3-act play. Act 1 is the AM session. This is where the initial tone is set, and we often get an early high or low for the day. Then you have Act 2, the lunch session. This is usually the intermission, right? It's quiet, things consolidate, and then you get the grand finale, the PM session. This is where the market either expands on the morning's move or it completely reverses it. Getting this basic structure down is so important.
Okay, so with that framework in mind, let's jump into our first category of daily profiles, the trending day. I'm sure you've seen these. These are the days where the market just picks a direction and boom, it just goes, giving you these really powerful one-sided moves.
So the first profile here is called the 2-session up close. And this is your classic, textbook, strong bullish day. What does it look like? Well, it usually starts with a little dip in the morning, a Judas swing, and then it's followed by a really sustained rally for the rest of the day, closing right up near the highs.
So what's happening under the hood on a day like this? Well, first off, the big picture, the institutional order flow on the daily and 4-hour has to be bullish. That's non-negotiable. Then the AM session usually pulls back into what ICT calls a discount array. All that means is it's pulling back to a level that institutions see as a bargain, a cheap price to buy, and that's where the rally kicks off. After lunch, which is usually just consolidation, the PM session will often take a quick dip to grab the sell stops sitting below the lunch lows, and then it's off to the races again, rallying into the close. Now, there is one exception to watch out for. If you've got some major news hitting the wires, price can just ignore lunch altogether and just power straight on through.
All right, now on the flip side of that coin, we have the 2-session down close. And as you can probably guess, this is the perfect mirror image of what we just saw. It's a strong bearish day that closes right down near the lows.
And the logic here is exactly the same, just flipped upside down. The institutional order flow is bearish. The AM session gives you a little rally up into a premium array. That's a level institutions see as expensive, a great place to start selling. And that's where the decline starts. After lunch, the PM session might pop up just for a second to grab the buy stops sitting above the lunch highs. And then the sell-off continues right into the close. And yep, you guessed it. Just like the bullish version, big news can just keep this thing falling right through the lunch hour.
Okay, so this is the million-dollar question, right? When should you actually be looking for one of these powerful trend days? Well, it all comes down to context. It's all about where you are on the map. These days are most likely when price has a lot of open road ahead of it. When it's in the middle of a big price swing on your higher time frame charts and there's nothing major in its way. But, and this is a big but, if price is getting close to a major wall of resistance or a big floor of support on the daily or 4-hour, your chances of a clean trend day go way down.
And that leads us perfectly into our next category, the reversal day profiles. Because this is exactly what can happen when the market does slam into one of those major higher time frame levels. It decides to, well, shift gears right in the middle of the day.
So the first reversal scenario we have is the AM rally, PM reversal. You've probably felt this one before. Price starts the day moving up, everything looks great, you're thinking this is a bull day for sure, and then bam, the afternoon hits, price slams on the brakes, and it completely reverses on you.
So what's the setup for this kind of reversal? Well, the underlying order flow might actually still be bullish, But the key piece of the puzzle is that price is getting right up underneath a major resistance level, that 4-hour or daily premium array we talked about. The AM session does its job and rallies right into that wall of sellers. That's your trigger. The PM session then goes hunting for liquidity, runs the stops above the lunch high or maybe even the morning's high, and then the reversal really kicks in. Now there is an important filter here. If that morning rally started from a really strong support level, then this afternoon dip might just be a pullback and the price could keep going higher afterwards. So context is everything.
And of course, we have the complete opposite, the AM decline, PM reversal. This is when the market looks like it's falling apart in the morning, just selling off hard, looking super weak, and then it hits a floor, finds its footing, and stages a massive rally into the close. And again, the logic is identical, just flipped. The market might have a bearish bias, but it's trading just above a major support level, that discount array. So the AM session drops right into that floor of buyers, and that's your cue. The PM session then goes hunting, grabs the stops below the lunch low or the day's low, and then launches a powerful rally. And that same filter we mentioned applies here too. If that morning sell-off started from a really strong resistance level, then this afternoon rally might just be a short-term bounce before the real downtrend continues.
All right, let's get into our final set of profiles. Consolidation days. Oh man, these are the days that can really chop you up and frustrate you. They usually happen when the bigger picture, the higher time frame direction is just messy and unclear, and you end up with this back and forth tug of war all day.
So that brings up a really important question. If there's no clear direction from the big institutions, what is the market even trying to do? After the morning session makes a move, what decides where the afternoon session is going to go? What's the target? Well, the answer lies in our next profile, the consolidation AM rally PM decline. This is one of those classic fake-out days. The market gives you a nice-looking rally in the morning, gets everyone thinking bullish, and then it just gives it all back and then some in the afternoon. So this happens when that higher time frame chart is just a mess, totally neutral. The AM session rallies, right? And in doing so, it creates a nice big pool of buy stops just sitting there above the highs. So now the PM session has a very clear target. First, run those stops, and then reverse and go attack the sell stops that have been building up below the morning's lows. But here's a key detail. If that morning rally ran right into a known resistance level, the PM session probably won't make a new high. It'll just pop above the lunch highs to grab liquidity and then turn around.
And for our final profile, you guessed it, it's the inverse of that. A consolidation AM decline, PM rally. The morning is all about selling off, getting everyone bearish and drawing in sellers. And then the afternoon session comes in, reverses course, and rallies to take back all those morning losses. The setup is the same. Institutional order flow is totally unclear. The morning session drops, creating that sell-side liquidity, those stops below the lows. The PM session's job is clear. Raid those stops and then reverse to go after the buy stops that are now sitting above the morning highs. And the same rule applies. If that morning drop ran into a major support level, the PM session probably isn't going to make a new low. It'll just dip below the lunch low, grab the liquidity, and reverse higher. You can really start to see how mechanical this all is, can't you?
So we've walked through trending days, reversal days, and those choppy consolidation days. And on the surface, they all look pretty different. But there is one single concept, one unifying idea that drives every single one of them. It's the ultimate driver behind all intraday price movement. And this quote from ICT just sums it up perfectly. At the end of the day, on an intraday basis, it is all about liquidity and where the stops are. It's a trader's market, and that means they are hunting stops. Every single pattern we just talked about, every move from morning to afternoon, it's all about one thing, the market seeking liquidity. Price is drawn to where the orders are, plain and simple. It's drawn to those big pools of buy stops and sell stops. That right there is the true engine of the market.
Hey, if you got some value out of this breakdown, do me a favor and hit that like button. And make sure you're subscribed to the channel for more deep dives into ICT's work. And seriously, if you have any questions at all, just drop them in the comments section below. A real human will get back to you.
All right, that's it for this one. Safe trading.